Hello dear traders, today is the 20th of January. I'm Anna Kasatkina, you're watching Daily Financial News on Insta TV. Ahead of the Bank of Canada's monetary policy announcement due later in the day, traders are scrutinizing fresh inflation data from New Zealand. Canada's central bank policymakers are most likely to implement further cuts to the key interest rate. Meanwhile, the Reserve Bank of New Zealand may follow in the footsteps of its Canadian peer. This scenario seems particularly plausible considering New Zealand's Consumer Price Index for the fourth quarter of 2015 released on Wednesday. The annual inflation rate slid to 0.1%, printing the weakest price growth over the last 16 years. The report turned out to be a major letdown for financial markets, as economies had expected consumer prices to increase by 0.3%. The quarterly inflation report also disappointed investors. Prices for consumer goods dropped by 0.5%. Analysts had projected a decline, but not one that steep. According to the estimates for the final quarter of the previous year, CPI inflation was expected to come at 0.2%. The main contributors to stagnant inflation performance in New Zealand were lower prices for petrol products and commodity exports. The downbeat news fueled market speculation over another interest rate reduction by the country's monetary authorities. Obviously, the gloomy sentiment surrounding New Zealand is putting pressure on the national currency. The New Zealand dollar gave up its previous gains in the currency market versus its US counterpart. The Kiwi plunged by 100 pips and was trading near 0.6350 in pre-European deals. However, the US dollar also faces some serious challenges. Learn why the greenback came under downside pressure from our next releases on InstaForex's TV. See you.